Hammers, CEO of UBS. Good to see you this morning. Solid set of numbers, buyback, dividend, all glowing headlines. But if you look at the net income, it's driven by interest, 35% bump from interest income. Is this the peak of interest income, or can it squeeze higher?
Well, so indeed we had a very good set of numbers in the fourth quarter, and not only on the income side, but specifically also on the underlying flow side. 23 billion of net new fee-generating assets, 11 billion of net new money, 9 billion of net new deposits, basically showing the trust of our customers to basically place the money with us and for us to help them manage it. On the back of that, clearly with lower market values on the fee income, that was a bit lower, but the interest income really came through. It is very much the dollar effect and the Swiss franc effect now as well. On the dollar effect, we feel most likely peaked. However, there is more to come on euro and certainly also on the Swiss franc.
Just on those central banks, we got up 2 weeks ago, and there was the feeling that maybe we're near the top of these central banks in terms of the hiking cycle, specifically the Fed. Paul Krugman joined us yesterday and he said, be careful, stop getting over your skis and overconfident on inflation. Are you overconfident that we've peaked on inflation?
We may have peaked on inflation, but it doesn't mean that the central banks will not further increase some rates, just to be sure. I do think that they are very clear in terms of what they want to achieve. They really want to get the structural inflation down. And that could come along with a real deceleration of economic growth. I think the recipe is that we rather have a short-term pain with a long-term gain than not being tough enough in order to get that inflation back to that level. And that is what I think central banks have in their minds.
In the fourth quarter, you've had some short-term pain. The fees were down 17%, transactions were down 19%. Is that the worst? Is that the nadir of the sidelining of wealth management clients?
Well, if you look at the different components on the wealth management side, so first what is important is that you see that the trust is there and that clients come to you. That basically shows that we have the right professional services, we have the right products, we have the right advice, we can take them through a period of challenges and unclarity. That period of unclarity is still there, right? So we see positive news coming from China, we see positive news coming on also inflation. We see some life back in the leveraged capital markets, which is normally a leading indicator. However, all early movements. So I don't think there is a trend there yet. So for the moment, I do think that our clients are hopeful, but in a wait-and-see pattern.
Well, there has been a move to risk on assets. This is the debate. We're 1 month in. There's been a move to risk on assets. You use the word sideline for wealth management clients in the fourth quarter. Are they nibbling? Are they active in acquiring risk on assets?
That's not what we see. We truly see that they are waiting for more clarity to come. And I think that's wise. We really want to make sure that there is more visibility. I do think that the coming weeks will bring that more visibility. We see there are central banks coming to the market. We see the New Year's, the Chinese New Year's behind us, and see whether the positivism coming from China will continue. We see corporate earnings coming through in the next couple of weeks as well. So I think the next couple of weeks from different sides will give us much more data points to get a feel for should we be risk on or not.